Coinbase continues to make moves that I think will ultimately be extremely disruptive with the blockchain at the core of what they're doing. They announced recently that they're partnering with PayPal to bring more of PayPal's stablecoins onto the Coinbase platform. That's after generating $910 million worth of revenue from its partnership with Circle for the USDC token. I think stablecoins are going to become a central piece of blockchain utility, and that's really how you update the financial system. That's what Brian Armstrong has been talking about doing for years, and they're taking steps in the right direction. The other big piece of news is they announced a $100 million loan to Riot Platforms, the Bitcoin mining company. That is a loan that's going to be backed by Bitcoin itself. So I'm going to dig through all these details today because these are the kind of big announcements that are going to make their way to the income statement and Coinbase's cash flow. That's what I'm ultimately most worried about. My name's Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's start with the announcement with PayPal. And this is from the Coinbase blog. The short story: we are expanding our partnership with PayPal to accelerate the adoption, distribution, and utilization of the PayPal USD or PYUSD stablecoin. Coinbase will enhance the stablecoin's utility by supporting one-to-one stablecoin to USD conversions. That's how you actually get from fiat currency to a stablecoin. So same thing is going to happen with something like the USDC token across the best-in-class custody and trading platforms. So that's going to be the Coinbase platform and also the Coinbase wallet. That's the custody piece they're talking about. They're going to also explore development of more on-chain use cases for the PYUSD. Now, the biggest piece of news here is that they're going to take away the fees that it used to take to actually convert from USD to PYUSD. I think ultimately what they're doing here is they're diversifying away from just being reliant on the USDC token. That's a stable coin Coinbase helped start. They still generate hundreds of millions of dollars of revenue because of their partnership with Circle related to that token. But they don't want to be just tied to that token itself. And also Circle considering going public this year. And Circle is kind of moving into Coinbase's space. You can see that from this release here. This is just a few days ago. Circle announced the Circle Payment Network to connect financial institutions like banks, neobanks, payment service providers, virtual asset services, and digital wallets. Basically, they're trying to become that payment disruption, that payment layer, that infrastructure layer that's going to be more efficient than credit cards and bank transfers are today. Coinbase wants to play a role in that. And that's what they're trying to do with something like the Base blockchain. Circle is trying to say, you know what, here's our solution. So you're seeing a little bit of friction between these two companies that have been longtime partners. Now, Circle does still need to share that revenue from the USDC token with Coinbase, but now Coinbase is diversifying its business a little bit away from the USDC token and Circle. At the end of the day, both of these companies are moving forward. So I'm not super concerned about the two competing. It's probably good that they're both competing in the space. And Coinbase owns a stake in Circle. So everything that's going on here, I think, ultimately comes back to Coinbase being a little bit more valuable because of this disruption that's happening, whether you're looking at the USDC token or PayPal's stablecoin. The other piece of news yesterday as I'm recording is that Riot Platforms is going to take out a $100 million credit facility from Coinbase, and that credit facility is going to be backed by Bitcoin. You can see some of the terms here down on the bottom. There's going to be a 2-month period where this is going to be available. It's basically a 1-year loan, and the interest rate is going to be the Fed funds rate or 3.25%, depending on where that Fed funds rate is, plus 4.5%. So pretty good interest rate for Coinbase. They've got a lot of cash sitting on their balance sheet, and that cash is just generating money like treasuries would right now. So why not loan it out to other companies, especially if it's backed by an asset like Bitcoin? It'll be interesting to see if this is the kind of thing that Coinbase is going to get more and more into. They have gotten into this with their own Bitcoin, borrowing against Bitcoin on their traditional service, on their exchange service. So this is something that's moving from the consumer business, the consumer side of the business, to more institutional partners as well. Makes Coinbase look a little bit more like a bank. It's not a traditional bank. They're not taking on deposits and then lending against those deposits and things like that. And you don't have the same regulatory structure as you do with a bank. But is this going to be sort of a new framework for how things are going to work on the blockchain, how asset-backed securities, how assets like Bitcoin are going to back some of these loans? It's going to be interesting to see if Coinbase is going to play a much bigger role on that finance side of things. I think just increases their potential addressable market.
Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now.
So where are we going to see this show up in Coinbase's financials? I think this is really the best way to look at it. This is all of their non-transaction revenue sources. So this is not the exchange business. This is all of the other businesses that Coinbase has. So you can see that stablecoin revenue, $910 million over the past year. And then you have blockchain rewards, interest and finance fees. That's going to be where something like the loan to Riot platforms is going to show up, custodial fees and other subscription and services. So some of the things that are involved there are going to be the base blockchain. If you have stable coins, like you have with the PayPal stablecoin or the Circle stablecoin, adoption on a blockchain that's fast and cheap, like the base blockchain, could help increase those sequencer fees that they're generating on that blockchain. So it'll be interesting to see. They haven't disclosed exactly what those revenues are from the base blockchain, but that could be a potential way that Coinbase is going to grow their revenue and grow that utility. That could be another point of disruption. Do they work together? Do Coinbase and PayPal work together on that base blockchain and try to make disruption to the payment ecosystem? So getting money from point A to point B. PayPal is the intermediary that has to use the credit card rails today. So they're paying the fees to Visa, MasterCard, Discover, those kind of companies. And that 3% fee that they end up charging to their customers, that's because there's fees involved with those payment rails. We've already seen Stripe adopt some stablecoins, and the fees that they charge their customers were about half of what they charge for credit card transactions. That's because Stripe doesn't have the same costs when you go to a stablecoin. They're probably making a higher margin. I think the fee is about 1.5% compared to about 2.9% for credit cards. So Stripe is actually making more money despite charging significantly less to their customers. Do we see something similar from PayPal? Do we see PayPal say, you know what, if you pay with a stablecoin on a PayPal system, we're only going to charge a 1.5% fee or a 1.2% fee. The merchant ultimately keeps more money, and it's really a win for everybody involved, except for those credit card companies and those traditional finance companies. This is the big play here for Coinbase. And the theme of this video and a lot of my coverage of the company is Coinbase is updating the financial system with the blockchain. And this is potentially a much faster, cheaper, and more efficient way to operate the financial ecosystem. If they can do that, if they can pull off that kind of disruption, there is massive potential for Coinbase. These little steps in the right direction are what we want to see as investors, because you keep taking these month after month after month. Before you know it, you have hundreds of billions of dollars of transactions moving from credit cards to other digital payment solutions like the blockchain. I think that's what the future of Coinbase, Circle, and even PayPal is right now. So let me know what you think about these news items in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.